Tom Anderson here, a senior business advisor with the Ferguson Alliance. Most people now are recognizing the insurance markets are certainly in some turmoil. And so understanding exactly what considerations for family-owned insurance businesses are most important and should be on the top of your list for discussion with your insurance provider or consultant is very important. The number one risk issue that most risk managers are reporting concern about, and one which is still settling out in the insurance markets, is cybersecurity risk mitigation. Best addressed first, however, through both enhanced internal controls and through a thorough vetting of any new AI applications in advance of their adoption. And only then, after having done so, seek out an insurance solution. This coverage, which is reliant on human processes that sometimes are vulnerable to lapse or employees that are not paying attention or introduce activities that haven't been thoroughly vetted, is what makes this one risk issue so difficult to manage. A second area that really has been on people's minds because of intense and increased regulation at city, county, much less state and federal levels is environmental liability coverage. It's important to consider adding this to a commercial insurance program, and it can be a low-cost, high-payoff proposition for some commercial and industrial family businesses. And it may also be very critical to have a history of that coverage and that protection if you're considering a change of ownership transaction. So that's an important one. Another one that can be useful and too often is overlooked is key man life insurance, which can protect the commercial value of the business when there's an unexpected demise of any key employee. And it also may help facilitate an M&A opportunity or perhaps a new credit facility to provide assurance to that lender that those people that are leading and who are, if you will, the real smarts in the business are not vulnerable to a life event. Another thing that's important is to improve the adoption and annual discipline around your HR department's review and amendment of the employee handbook for changes in the case law. There's a high level of activity of jury awards and things that have taken some past employment principles and made them very expensive if you fail to adhere. Another one that's important to consider is the use of credit insurance. This can be very helpful to allow a quicker domestic customer credit approval process. You can capture a client without taking the time and the risk of losing that client while you conduct a normal sales default credit risk. And also could be related to a supplier who you're relying on to take advantage of some newly originated long-term sale or purchase contract. Another important area that a lot of people are only beginning to be aware of is group captives. Group captives are a way to get much larger scale in and therefore pricing discounts for casualty. And a separate solution in the group captive can be involving employee benefit solutions. So be sure to inquire about that and consider it. Another area that's kind of interesting, particularly for family businesses, is the integration of commercial risk insurance programs with personal insurance programs. There are many sales leaseback transactions between the owner of a family business and their company that might allow for that owner to get a much lower cost and availability of insurance if that ownership of that facility that's used in the business or otherwise is somehow made a part of the commercial insurance program. Another example of that nature related to workman's comp and excess liability might be your farm and ranch ownership that a commercial business could include in their policies for those two areas that otherwise could be extended to an owner's personal farm and ranch activity. It's also important to recognize that the risk markets are more complicated than ever, and that whatever has worked in the prior years There should not be a same as last year type rubber stamp approach to renewing your policy each year. You need to really evaluate the changes in the market and understand that failure to do so could put the entire economic value of the equity in your business at risk. If you would like some assistance in understanding these issues or just to dig deeper into some of these comments, please book a call with one of us at Ferguson Alliance, and we'd be glad to give you more advice and guidance. You can find us on LinkedIn or at fergusonalliance.com. Thank you.